Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what is happening in this wild market that we're having recently. And pretty exciting, but pretty spooky at times. And let's just get into it, really. I mean, let's just talk about it and figure things out. So if you enjoyed the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, you can get access to my membership section on YouTube. There's the link in the description of the video at the very top of the video. There's a link. Definitely click that. For just $3 a month, you get access to all my intraday thoughts, posts, updates, technical analysis, options flows on Tesla, etc. Sometimes other stocks as well, every single day in my membership section on YouTube. So I'll be here even on the good days and the bad days, like today, like yesterday. I'm there, I'm posting, I'm giving my thoughts. And well, my members have actually been pretty happy about it, at least from what I can tell, right? Because we've actually avoided a large amount of this pain ever since we broke below this essentially bear flag. So that's a good sign, but nonetheless, check it out. And yeah, I'm not a financial advisor. I don't know if I said that, but anyway, let's get into it. Tesla closing the day down about 4.3%, closing at $207.61, which compared to the market is pretty much in line. Actually, the market, we had another day of just puking down with QQQ down about 2.4%. Now, I want to very quickly start with QQQ here because it's pretty important. And the reason I say it's pretty important is because I don't know if some of you remember, but every now and then in some of my videos in the past like week-ish, right? Week to one to 2 weeks, somewhere around there, I've been talking about QQQ, how I personally expect it to come down to about this exact level right now, 445, right? You remember that? I'm sure you can find in my videos like a week-ish ago, maybe slightly less or slightly more, but somewhere around a week ago, we were talking about how, coming back down to retest this level down here, which was a major support, a resistance, major support down here, which pretty much coming back to retest that instigated this massive rally. We're back at that level once again. Now we're dropping at some pretty elevated volumes. I'm not gonna lie, it's a little bit on the more concerning side, at least for QQQ. But we are at now, in theory, a major demand zone, right? Major consolidation that happened over here. Ultimately, we had a false breakdown and we rallied right back up. You can see the volume profile is major area around here as well. So, we're entering a pretty massive support area for QQQ, which of course can, naturally affect Tesla. But believe it or not, Tesla is also at a major area of demand support. Let's talk about that. So Tesla, obviously, making its way down in this bull flag or just downward channel, whichever one you want to look at it, but nonetheless, still looking pretty damn solid. Believe it or not, it's actually still looking pretty good. And I'll explain why. There are obviously some caveats. There's still a chance this stock doesn't look as good anymore, but as it stands right now, if you've somehow avoided, buying any of the dips so far and you're still holding out on cash, not financial advice, just my opinion, but this would not be this would be a phenomenal risk versus reward. Obviously, there's still risk involved. Obviously, this can still fall apart and make its way down substantially further, but the risk versus reward here with proper risk management and stop losses at this level is pretty phenomenal, in my opinion. Why is that? Let me explain why. There's many reasons as to why that is. Let's talk with the basic ones first, the very simple ones, right? So naturally, right, remember here we had this massive drawdown. We kind of consolidated pretty much right around this level that we're pretty much at right now, all the way back here in January, right? Then we had the earnings drop, we came back down, kind of consolidated, came right back up. And you can see here, right, this is like a perfect area to show it, right? Massive area of support here. It happened before as well, you can see over here. Then we came back up, turned it into a resistance, and we went our way down even further, had a bit of a resistance all the way over here and a couple of times over here as well, which is pretty much around $200 per share, right? Couple of supports here, couple of resistance here, that also instigated moves down even further upon holding or breaking. And then ultimately we ended up rocketing past it, right? So essentially what I'm trying to say is this whole level right here, pretty much where we're at right now, this like 206-ish range, all the way down to pretty much like 199, massive area of support, demand, really. Right? If there is an area that Tesla wants to hold to really maintain still a pretty bullish outlook, in my opinion, at least for the short-ish to potentially medium term, this right here, this general vicinity is it. This is where you'd want to see that bounce really start to form. This is where you'd want to see that bottom start to form. There's a few other reasons as to why that is. Let me talk about that. So let's look at this little downward channel / bull flag that we're in, right? What does this mean? What is this bull flag, right? Well, obviously we had a massive melt up and now we're essentially consolidating downwards in this bull flag. This is still a valid bull flag. I'll explain why. But before we get into that, I want to explain, usually when you get these melt ups, obviously it happens on elevated volume. And what happened during this melt up? You can see we had very low volume during this consolidation. We finally broke out, finally had that melt up. And what did it happen on? It happened on elevated volume. Very much so elevated volume. And then as we topped out pretty much right around this general area, what happened? The volume was very high. It spiked pretty aggressively even on this initial sell-off. But what happened after that? the volume as we're moving downwards pretty substantially too, right? We're obviously correcting pretty aggressively here, which is usually what a bull flag is. A bull flag is just a correction after a melt up into another melt up. That's usually what a bull flag is, right? And in this case, we're correcting downwards, which is, it's fine. It's as expected, really. But it's happening on lower volume. Now, obviously, there's some exceptions like this day right here on the 24th of July, right? Obviously, that had a bit of a spike in volume, but ultimately, the overall trajectory ever since the initial melt up has been down. The overall volume has averaged lower. Even today had a lower volume than yesterday, right? So we're crashing. Like, this is 2 days in a row that we've crashed, but the volume is very low. The only day that it's higher than on volume was the day right before, which was, of course, July 31st, right? That was the only day that was lower in volume. But these 2 recent days that were pretty substantial decreases in, share value, I guess, right? Share price, low volume, lower than pretty much every single day ever since we've been consolidating downward. So the point I'm trying to make here is, as we're consolidating, as we're correcting, as we're kind of cooling off, we're doing it on an average of lower volume. That, to me at least, I'm just a messenger, don't shoot me, but that's textbook. That is textbook. That is just kind of what is to be expected during these consolidations. And watch, assuming this area holds, assuming things go roughly according to plan, and assuming we do bounce from this general vicinity, maybe we go a tad lower, right? Maybe we go a slightly closer to 200. I don't know for sure. Right now we're playing with like very small numbers. Like, I don't really care if it goes slightly lower than this or not. The point is, as long as we hold this general vicinity right here, and we do break out, you're going to see the volume is going to start spiking once again. And that's usually how these things play out. You spike on massive volume, you start consolidating either downwards or sideways, the volume starts to decrease. Kind of like what happened here, actually. Let's take a look at this example here, right? We had this massive drawdown. Earnings came up. We spiked very aggressively on some elevated volume compared to before, especially this candle here. And what happened? We started entering a massive range of consolidation, a very long one as well, on very low volume. And what happened? We once again spiked on increased volume, and now we're doing it again, except this time we're correcting downwards as opposed to sideways, lower the volume. And once we do break out of this bull flag / downward channel, the volume will spike once again. That's just how it goes, right? It is what it is, right? Now, let's talk about a couple things here. So there's 2 ways to look at this in terms of this drawdown and where it can lead us to. First and foremost, you can look at it on a bit of a bigger picture. So we take the Fibonacci, we go from this overall swing low, like this overall trend swing low, somewhere around this 140-ish range, bringing back up to this recent high that we had at about $270 per share from wick to wick is what I like to do. And you can see right now we're pretty much right at that 0.5 Fibonacci retracement, sitting at about 205, which is roughly what we're holding right now, which is roughly where that general massive support and demand area should be, which I'm not going to lie, the candle did close near the bottom of the day. So, it's not the most convincing one just yet, but, it can take some time. Of course, it can take a few more days to really kind of garner that, support back into the system, if you will, which is fine. But the point is, we're at the 0.5 Fibonacci level. That's perfectly fine. Normal stuff, nothing to be too concerned about, right? Good. However, obviously, if this breaks, if we start losing this kind of, very low 200s level to pretty much 200 itself, well, then we risk falling lower to about that 618 Fibonacci level, which is pretty much in the high 180s. And that will be like the final zone that this stock better freaking hold, or else things can get much uglier. Yeah. And the thing is, if we do actually come back down to this high 180s, I still think it's bullish because we're still technically holding this retracement from the overall swing low to this overall swing high, which is fine. But in my opinion, it'll take longer to break out personally. That's just what I think if we do end up coming down to about this, high 180s range. Now, that's kind of the big picture there. But let's talk about this specific bull flag, right? Because the way I want to look with this bull flag right now is, well, okay, the bull flag occurred after this massive melt up. So where was the swing low literally right before the melt up? Well, it was pretty much right around here at around 168, we'll say, right? We had this little swing low at 168, and then pretty much ever since then, that massive melt up occurred not too long after. Let's measure from there. So we have the Fibonacci from here to here. Let's take a look. Where are we right now? You can see we're at one of the most common retracement areas that is technically one of the more, when you get a massive move like this, usually a retracement back to the 618 level is where most institutions and whatnot will start looking to re-enter, because this is now a fair retracement. The stock is now back at quote unquote fair value relative to this retracement and the melt up and whatnot. And this is a pretty damn good area for them to start accumulating once again. And you can see it's pretty much right at the same level where the 0.5 was on that larger time frame. The 618 level is pretty much also around this 207, 206. Again, I'm not drawn to perfection, but close enough, right? Which is exactly where we closed at. So pretty crucial level. Again, this is a very, very important level. This is, if we hold around this level, I think Tesla will look pretty bullish moving into honestly August, really. So we'll see how this holds. But again, these are all the reasons why I personally believe that, lower volume, holding this bull flag and channel that I've talked about for quite some time, even back when we were in the 250s. I've been talking about this for quite some time. And we're pretty much here, massive demand area, massive support area. That was, of course, a massive area of resistance before. Now, in theory, let's hope it acts as a support. So far, so good. But obviously, we need a bit more to really tell. So, those signs are all good signs. So that's kind of the main thing I'm looking at. Now, let's talk about some potential bearish signs, right? And again, I want to make it clear. If we do break out, I personally expect to move back up to about 240s, 250s, at least as of right now. We'll reassess if and when that actually happens. Now, let's talk about some bearish things, though, because it's not everything is good news, right? There are still some signs of concern. For instance, if we do lose this 205 to 200 level, that's bad. That's bearish. That's going to be a lot more concerning. Now, granted, we still have that, high 180s level I mentioned, but even just going there alone, to me, signals a bit more weakness than I'd want to see. And it probably means that it'll take longer for us to get really any more meaningful post that move, which, is not something I'd personally want to be seeing right now. The MACD still flipped bearish on the daily chart. The stochastic, unfortunately, went from a bullish flip back down to a bearish flip, but it is on the bright side in oversold territories, but not a confirmed no bullish flip, really. I mean, we had a fake breakout, essentially, if you want to call it that, but we're back to being a bearish here. Bearish crossover on the stochastic, not ideal. The BX trend is still making lower lows, not ideal. So these indicators are still saying that, we're not ready just yet to make a move higher. At the very least, we get a consolidation, or at least we start building up around this range in order to get that next move higher, maybe end of next week or something like that. That's kind of what I'll be looking for as of right now. On the 1 hour, on the other hand, you can see we're actually getting ready to and just barely actually crossing bullish on the stochastic. So the 1 hour smaller time frame is starting to show some momentum building the other way. You can see here the BX trender made a higher low. The stochastic, not yet flip bullish, but it's starting to curl. So the 1 hour is starting to show a bit more promising signs, which of course in turn can lead to the daily to show some more promising signs. Kind of remember when I said, I think somewhere back here, I talked about how the 1 hour is about to cross bearish, and even though the daily is, kind of looking pretty decent, the 1 hour is showing some bearishness, which, could be a little bit concerning. Same idea, but now flipped. Now the 1 hour is starting to show some signs of bullishness. So let's see if that actually, means anything moving forward, which can then, of course, kind of transition over to the daily chart and transition the daily chart to now showing a bit more bullish signs on those indicators as well, right? That's just kind of how it works, plain and simple. Moving forward though, right? Another bearish potential thing is the fact that, well, okay, so this bear flag, you can argue, started pretty much right before this earnings gap, right? Pretty much we'll just say from right around here, we'll call it, right? Massive fall, then we started creating this bear flag, and then we broke down. So if you do a measured move, technically, this means that the bear flag can potentially actually drop down to pretty much that exact 618 Fibonacci level from that 140 swing low, which is pretty much around that 190-ish range or high 180s. Now, I don't know if we'll actually get there. I personally hope we don't, but if you were to measure this move down, then technically the bear flag from this breakdown does suggest that that is still a possibility. Again, I don't really like measuring it this way personally. I think it's a little bit amateurish, honestly, to measure it like this, but that is a way to measure it. So that's something I thought I'd mention and bring it up as a bearish potential. But I personally don't want to see that, and I don't think we will, but you'd be a fool to completely disregard it as well. But that's kind of the main thing I'm looking at right now, and pretty much the main things I am seeing on Tesla. Now, going to the weekly very quickly, we are literally breaking back down, unfortunately, into this below the weekly trend line, right? That's unfortunate. Now, this is where trend lines I never really like too much, because you can technically just drop it all the way down like this and be like, oh, look at that, we're actually retesting that, and we're technically not actually invalidating any of these candles because it's not really going through any candles in terms of their closure. Like, for instance, on this candle all the way back over here on September, right? If you were to draw like this, for instance, okay, well, now we're going right through, it doesn't make any sense. Going through these candles doesn't make any sense. But technically, if you draw like this and you'd be like, oh yeah, look at that, we're retesting it, but we're never actually overriding any candles, never really truly going through a candle closure, right? A candle has never actually closed above this trend line, and we're retesting it. Look at this beautiful retest. I don't know. This is why I don't like trend lines too much, because they're just so subjective. You can just keep switching it any way you want to really fit any narrative. So I don't know. I mean, technically we're breaking back down below, I guess, but again, this is why I'm not a fan of using them too much. Okay, if we broke back out, then we went back in. It's like, okay, but now what if we break back out? Then it's like, okay, well, what the hell does this trend line even mean anymore? So it's, I don't know. It's a very rough guideline in my opinion. I personally look at these kind of situations more. On top of that, like I said before, I think back when we were still actually just approaching this level, I talked about this cup and handle pattern and how everyone's going to start talking about it. Well, we're still forming it, right? We're still forming this cup and handle pattern, right? We still have this massive cup and handle pattern. We're still within this massive handle. And if we do break out, this could be a pretty nice explosive move at least the 240s, 250s. But if it actually plays out correctly, and ultimately the goal will be to break the neckline of the cup, which is pretty much around that 265 to 270 range, then we get very, very bullish. And I think we're going to blast off substantially. But that's still a massive if, right? We'll get to that if and when it actually gets there. So anyway, that's kind of the main thing I'm looking at right now, ladies and gentlemen. Let me know what you think down below. Thank you all so much for watching. Again, on this channel, you'll always get my opinion regardless of whatever's happening. I try to be as subjective as possible, or objective. No, so objective. I rather not subjective. Quite the opposite. Objective as possible about whatever I see in the chart. I'm trying to just kind of tell you what it is. I'm not trying to be a perma bear. I'm not trying to be a perma bull. I am a bull on Tesla long term in the company, but the stock chart in the company are often, especially short term, not the same thing. Make sure you understand that. That's very important to understand. I used to learn that. I learned that the hard way before. Very different things, very different beasts. Long term, they obviously correlate and they obviously meet. Short term, sometimes even medium term, not as much. Anyway, that's all for the video. Let me know what you think down below, ladies and gentlemen. I'll see you for the next one. Peace.